And of note for AbbVie, an executive says it continues to advance Cyrus's leadership position in Cyrus, where a total prescription share of US biologic market is up to about 38%. Good morning, equity traders. The daily US equity opening news is now available on the headline feed and the research suite.
Biden says the GDP report shows the US's strongest economy in the world.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
So 1 minute now to the cash equity open and the market on open imbalance. So we are looking now to the market on open imbalance. The S&P 500 is 60 million to the buy side, the Nasdaq 100 20 million to the sell side. The Dow 30 stocks are 40 million to the buy side. Mag 7 stocks just 10 million to the sell side.
Commentary from the Deutsche Bank CFO. When asked about M&A, says we remain focused on delivering on their objectives. Says they'll see how the road evolves much further down the road. Just so you are aware, there is a exclusive interview with BOC Governor Macklin posted in the Financial Post. He did state that we do need to increasingly guard against the risk that inflation falls too far. Says we want inflation to come down, but we want it to come down sustainably to 2%. And just hear a commentary from the leader of Yemen's Houthis, says attacks on Israel will continue. Just a note for ABV, BBV. Company now expects the CRWD sales of about $11 billion, an increase of $300 million on strong performance across all approved indications. According to remarks on the conference call.
Bit of energy news from Russia. According to Reuters calculations, primary offline oil refining capacity for July has been revised up 42% versus the prior plan of and that's taken it to 2.5 million tons. That's according to Reuters.
So noting the Russell 2000 up 1% on the session today, with the S&P down 0.5% and a flight away from some of these mega cap stocks, more of a focus in the bullish direction on the smaller caps in the Russell 2000 today. And that's the Nasdaq down 1% now as well.
And just for those who are following micro updates on the Russia situation, Russia's Patrushev says Russia thwarted NATO plans to deploy a naval base in the Sea of Azov. Comments via TASS. Again, Patrushev just accusing the US of wanting to create a logistical hub for weapons supplies to Ukraine. And a bit of energy news here regarding Angola. The first phase of Angola's new Cabinda crude refinery is seen reaching full production of 30,000 barrels a day by July 2025, according to its CEO. And folks, just a quick market update over here. Just building on what my colleagues talked about a short while ago here. Stocks just extending to the downside. Again, it does seem to be a continuation of the sorts of trends that we've seen over the last couple of days. Lots of attention on NVDA after it broke below its 50-day moving average yesterday. They're shedding another 6.5% today. Elsewhere, other big tech names that have been in vogue recently are also seeing a bit of downside, Google amongst them as well. Again, doesn't appear to be anything fresh crossing at the moment. We're just acknowledging the moves over here, and we're framing it as a continuation for now.
So we're looking now to the fear and greed index. So currently sitting at 40 out of 100, which indicates fear, while the crypto fear and greed index is at 60 out of 100, which indicates greed. Keeping an eye on the VIX as well, it's up 5% on the day at around 19 points. So in 10 minutes time now at the bottom of the hour, we see the release of the weekly EIA natural gas change. Forecast is for a build of 11 BCF on the prior 10 BCF build.
For KR and ACI, they have agreed to postpone their merger until the September trial, according to reports. for PARA Paramount. Paramount Skydance's $8 billion merger has been hit with a court challenge, according to Bloomberg. Stockholder says Redstone is forcing the $8 billion deal. For the energy traders, a few comments from Citi on energy markets just crossing newswires. In Citi's view, it appears speculators continue to lean bearish oil markets into quarter end, barring a weather or supply shock. Opinion from the folks at Citi.
So in 5 minutes time now, at the bottom of the hour, we see the release of the EIA natural gas change. The forecast is a build of 11 BCF on the prior build of 10 BCF. 1 minute remaining.
And at the bottom of the hour, we'll be on the lookout for the EIA's nat gas storage change data for the week of 19th July. The consensus looks for a build of 16 BCF versus last week's build of 10 BCF. For RCL Royal Caribbean, executive says more dry dock days are seen in Q4. They're on conference call now post earnings.
Ten seconds. A build of 22 BCF, a build of 22 BCF, higher than the expected build of 11 BCF. And noting some weakness in natural gas prices following that larger than expected storage build in natural gas. We have posted out the weekly EIA natural gas storage report on the feed for anyone interested. A choppy choppy session for the US indexes here. The S&P 500 just pairing some losses, still down around 0.3%.
About a minute now to the bottom of the hour. Nat gas storage change for the week expected to show a build of 16 BCF. 10 seconds. Build 22 BCF. That's a larger than expected build. EIA nat gas storage change for the week of 19th July. Build 22. We were expecting a build of 16 from a prior 10. For Meta Platforms, META, according to sources cited by Reuters, Meta is set to be hit with the first EU antitrust fine for linking Marketplace and Facebook. The antitrust decision against Meta is expected after August holiday break, according to these sources. US Sino related news here. US ambassador to the WTO says it's regrettable that China is raising Inflation Reduction Act dispute at the WTO, hopes to dissuade them.
So seeing comments come through from US Treasury Secretary Yellen says US second quarter GDP and inflation data today affirms that the US is on a path to steady growth and declining inflation. Strong US growth due to Biden-Harris administration's economic plan, with 15.7 million jobs created since taking office. It does note the prices are still too high for many Americans. The administration is working to address cost pressures in housing and healthcare as well as energy. Yellen adds that the US concerns over China's excess capacity and its threats to workers and firms are shared by many at the G20 meetings. Yellen says the global economy remains resilient, driven in large by US economic performance. U.S. Treasury Secretary Yellen also noted that we will keep pressing China to change their economic model.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Excess capacity. So in 10 minutes time now, at the top of the hour, the US Kansas City Fed Manufacturing Composite Index is due to be released for July. Forecast is -5 on the prior -8. The manufacturing, saw a prior of -11. Keep in mind as well, we're expecting comments from ECB's President Lagarde at the top of the hour, who attends the Paris Summit 2024 Sport for Sustainable Development, titled Faster, Higher, Stronger, Together for a Better Future, again in Paris, France. So in this rebound in the US indexes as well, keeping an eye on the markets, just noting NVDA shares turning positive after erasing a 7% intraday drop.
And just note for Diageo, perhaps of note here, New Delhi police summons Diageo India CEO, and this is to appear before an investigation linked into payments by government agencies for liquor purchases, according to police notice. And just note some remarks here from Treasury Secretary Yellen. She says that Biden has driven a remarkable economic recovery and restored US standing in the world. Again, it does seem to be starting off with a tribute to Biden. In terms of the actual economics, US Q2 GDP and inflation data on Thursday affirms US on a path to steady growth and declining inflation. She says there's political reasons behind the strong US GDP growth. It's due to Biden-Harris administration's economic plan, apparently, with 15.7 million jobs created since taking office. On inflation, however, Yellen says prices are still too high for many Americans. The government is working to address cost pressures in housing, healthcare, and energy, and the administration will continue to commit to multilateralism and building ties with allies. Yellen says they will keep pressing China to change economic model that channels too much savings, too many subsidies into manufacturing, creating excess capacity. And US concerns over China's excess capacity and threats to workers and firms are shared by many at G20 meetings. PFE Pfizer, the European Commission has approved Pfizer's Duvakitix, a one-time gene therapy for adults with haemophilia B.
So in 5 minutes time now, at the top of the hour, we do get the release of the Kansas City Fed Composite Index, forecast -5 on the prior -8, and the Kansas City Fed Manufacturing Index, so a prior read of -11. Keep in mind, we do see this data released early sometimes, so keep your eyes out for that if you are interested in this data point. Also at the top of the hour, comments from ECB's President Lagarde, who's attending the Paris Summit, Sport for Sustainable Development Conference.
And folks, again, just want to acknowledge some of the choppiness that we're seeing in US markets at the moment. Remember when we updated a short while ago, NVIDIA was down as much as about 6.8%. They're now turning positive. Indices have pared back losses. ES back into positive territory. NASI goes pretty much flat for the NASI 100 future. Again, not really seeing any headlines. Some market contacts have suggested it could be a function of the rotations that we've been reading about recently. Again, we were skeptical about the moves down, so we don't want to read too much into these like smaller moves intraday. But again, we have had a lot of tech earnings, semiconductor earnings that have disappointed expectations. Others have been extrapolating that and suggesting that when NVIDIA reports its earnings towards the end of August, we could see similar sort of results. Again, just worth keeping these factors in mind. I'm not particularly subscribing to any of those. Long and short of it here, ES up 1/10, NASI down around about 1/10, having been down quite a bit more than that just a short while ago.
So 1 minute remaining for this US data and possible comments from ECB's President Lagarde as well. Composite index minus 13, minus 13, lower than forecast minus 5. Manufacturing at minus 12, minus 12, off the prior minus 11. Just getting the short-term US Treasury sales for next week as well. So the US is selling $70 billion in 6-month bills on 29th, settling on August the 1st. And they're selling $76 billion in 3-month bills, 29th, settling on August 1st as well. So unchanged from the prior auction amounts.
Earnings here from CMA CGM. Q2 revenue was at 13.13 billion. That's slightly above the 12.29 billion seen a year ago. EBITDA at 2.48 billion. That's slightly below the 2.59 billion seen a year ago. And net profit at 661 million, as well below the 1.33 billion seen a year ago. And shipped volume up 6.8% year on year. With regards to commentary from the CFO, said strong demand mainly due to solid economy, though geopolitical concerns a factor in restocking. Shipping may see seasonal slowdown in Q4, but solid demand and Red Sea disruption to make this gradual. And lastly, congestion due to Red Sea crisis, currently most acute in ports like Tangier and Al-Kraz. Situation is easing in Asian ports. And on the bills front, US is to sell 76 billion 13-week bills on July 29th. A bit further is to sell 70 billion in 42-day cash management bills on July 30th, and 70 billion 26-week bills on July 29th, all of which are to settle on August the 1st. And some data here from Kansas City Fed. Manufacturing at -12, that is slightly below the prior -11, and the Kansas City Fed Composite Index for July at -13, that's below the -8 prior. And an update here for Intuit, ticker INTU. Company does appoint AI leader Forrest Norrod to its board of directors, who is, or was rather, an AMD executive with deep AI expertise, with the aim to help accelerate the company's AI innovation.
As noting the S&P 500 in the green now, up around 0.1%.
And of note for Novo Nordisk, ticker NVO, a regulatory European authority adopted a positive opinion for an update of Novo's Wegovy label to reflect risk reduction of major adverse cardiovascular events.
US Treasury Secretary Yellen says higher US rates induced capital influx, boosting the dollar.
And some commentary here from US Treasury Secretary Yellen says, "We believe in a market-determined exchange rate."
So in 10 minutes time now at the bottom of the hour, the US is due to sell $90 billion in 4-week bills. The prior high yield was 5.27%, the prior bid to cover was 2.59.
And a
All
bit
right, check 1 2, check 1 2.
Forex market interventions should happen only rarely and in situations judged to have volatility after consultations.
Alexa, hang up. I don't know why you're on. Hang tight, guys.
And a bit further here from US Treasury Secretary Yellen says, "We don't think it's desirable to try to negotiate a global agreement on taxing the super rich."
Stop posting here. So now they do it.
So in 5 minutes time now at 11:30 a.m. Eastern Time, the US is due to sell $90 billion in 4-week bills. The prior high yield was 5.27%. The prior bid to cover was 2.59.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special
And
offer
on
of
the
Financial
US
Use
election
Pro
news,
for a
Obama
year's worth
team
of our service
expects an
for the
endorsement of
price
Harris
1
soon.
month.
The two have
Save
been
92%.
involved in regular touch. This according to Reuters, citing a source.
All right, sorry about that. Got a couple things I got to do in the background here before I come on. Apologize. 3 minutes left until I said I would be on, so I think I'm a little early still. All right, break time. Be right back. We got a couple things we got to look at together today, so stick around. We got some stuff to go over here with the market. So I was unsure this morning if we would immediately break up to the. So, well, first of all, yesterday into the close, I didn't get a price that I wanted, so I was kind of pissed at that. I wasn't happy. I wasn't happy yesterday. I went back outside and worked again last night. Check 1 2, check 1 2. Can you guys hear me out there? I sound tinny in my ear. I just take a shower, so it could be my ears. So we got to talk though. We're at an important inflection point again right now. So, let me see if I can set this up to discuss this with you guys so you can follow along easily. Give me a second here. Yeah, we're breaking down right now. Okay, so I figured we were. I made a statement about this in the Discord earlier this morning. We're going to chat about that right now. So I'm going to try to, simplify this stuff for you so that they're easy to grasp concepts, right?
So
I'm not trying to.
results of the
Yesterday's conversation. I had a conversation yesterday with vol signals, right? And a lot of that conversation, it wasn't said, but it was talked about, which is you can overcomplicate things and get lost in details. And the other point he made was that when he's sitting, paraphrasing here, but when he's sitting in his job as a market maker, he has all the tools in front of him. These are very expensive tools, right? And instant information that he couldn't even have himself when he's trading for himself privately on his own private trades. So, and it's easy as a retailer to get caught up in details in the gears of the market. So So his point was you have to understand that, yeah, you can know every detail about gamma, but if you get lost in gamma alone, you can get fucked up, right? You can get fucked up trading traditional stuff. You can get fucked up just trading Elliott wave. You can get fucked up. There's like, so you need to have some kind of a general awareness. It's less like I shouldn't say an engineer. I'm sure there's some engineers that I forget what they're called, like full stack engineers tend to have a little bit of information about a lot of different things. This is a good example, I think. Like a full stack engineer has just enough information to understand what a front and back end engineer is doing, but couldn't take their jobs away from them, right? Normally. Don't tell me in the fucking chat that you know a full stack engineer that can fucking do a pipeline and fucking draw perfect circles on the front of a website. So you get the gist, right? So you want to understand these concepts, but you don't want to get pigeonholed into them, right? You don't want to go down. You don't want to go down the hole and get trapped by those that one cog in the machine, because it's a fluid movement kind of a thing. There's a million little cogs going on. You don't always know, hey, this should be happening right now. Matter of fact, he was talking about a condor that came out that wound up pinning a market that should have rolled to the downside, right? And he saw it working at his job. And what do you do with that? There's nothing you can do, right? You have as much information as you have, expectations as to what you think that what's going to happen. And I've told you a million times, price action is king, right? No matter what, price action is king. So if it goes against your plan, have another fucking plan for the other way, right? If it goes against you. So anyways, I'll leave you with that. So right now, dude, my voice sounds fucking weird to me. Sound like a tinny child or something. Anyways,
So 5.285%.
what I want you to know here is that we down here at this. All right, so we opened up so we closed yesterday, right?
Ordering 55.
I didn't get the price that I wanted. I was all pissed off. Come back this morning, and there's two thoughts in my head. We're either gonna rip off the bell and have a very short-lived. This is what is this? 9:30, right here. And mind you, you're on a 1-minute chart here. You guys are trading like we're in a fucking. You guys are trading like we're in a daily chart here. Like this is a moon. This is a crash. That's the myopic, 1-minute chart or a 5-second or not a 5, so like a 30-second chart or something. I know some of you savages are trading those. But
positive now.
Here's 9:30 right now, right? Now looking back on it, it really wasn't too much of a. It was a pull down and then the rocket ship higher, right? So I figured we either green barred straight up off the bell, pull back, and go straight up. One or the other. I didn't know. Now, we did the thing, right? One way or another, we did the thing. We went higher. And that was the way to go. There's a few things I want to show you here. I'm going to start with, dude, my voice sounds like shit right now, and I don't know what is going on, and it's creeping me out. So there's a few things I want to show you here. This is a better, cleaner picture of gamma here. So can I bring this up or no? This looks like shit here. It's not really. I think I made some adjustments to my screen, so I apologize. Let me see if I can hem this in a little bit for you. All right, is that going to work? There we go. Let me hem that in over there. Hem that in over there. Does that work? Wait a minute, a little bit more. No.
Making you aware on a Tesla update, CEO Elon Musk did say on Thursday he will discover
right about there.
$1 billion investment.
Bear with me here for a minute.
AI as the electrical vehicle maker looks to double down on efforts to expedite the development of its robo-taxi and self-driving products.
Is that helping here? Hold on. I got to fix this for you guys. I got some work to do.
Just repeating that last headline, Musk is to...
Why is that only showing that much? There you go.
$1 billion XAI
All right, I got to fix this later.
Tesla board.
No, not that far over. A little bit more. Okay. So the thing that I want to show you here, the thing that's important is, this is a pretty fairly simple thing to look at here, is, now follow along with me, okay? Please do. We came all the way down here, whoop, and we bounced, right? A lot of space here, isn't there? right? A lot of space in here, right? It's kind of like the last this like 5400 down here, 5400, 5410 or whatever. Is kind of like you would expect. Now we talked about this yesterday too, right? When we slice through these big gamma bars, we can do this we mostly do this on the upside, not the downside. We said that yesterday. But if we slice through something like this, it's usually based upon a news event, some bad news. I would have expected us today to blast through this if GDP had come in really fucking low. And we'll talk about GDP later because we already knew that GDP was going to come in good. It was revised to be right around here earlier in the year and at the end of last year. And then they did some downside revisions this year. So this doesn't shock me that it came in pretty good today. But we were expecting some bad fucking news to break through this, slice right through this. We didn't get it today. PCE is another opportunity for that slice to come in that we blast down. Now, there is a problem here, too. CTAs are triggered to begin selling below here in a meaningful, very meaningful way, like aggressively. So we're going to quickly look at this chart right here. This is CTA positioning, okay? And I'm going to draw, and forgive me for doing this here. Please forgive me for doing this. But I want to, wait a minute. Is this going to work here? Cool. Is that working? All right, it doesn't really. Hold on a second here. Give me a second. We don't need to be that big. It's for his pleasure, not mine.
85 billion 8-week bills, a higher rate of 5.26.
What I want to show you here is this right here.
Times, and a bit further, U.S. sales 90 billion.
And I also want to show you this right here.
285%. With a bid to cover ratio of 2.77 times.
And the reason I want to show you that is because this period here, I believe, was April 3rd. Don't quote me on this right now, but to the 12th, April 3rd to the 12th, and we're starting to head down in this CTA positioning. So just at home, make a note. At home, make a note. April 3rd, April 12th. It's roughly where it doesn't really matter that it's exact. It matters what happens here, and if we are to break through, what follows, or if we break higher, what follows. We want to know what the outcome or what this is in prior experience, and then what are the outcomes on these actions here. So. We're going to take a peek at that. It should be, how do I put this thing back up? All right, come on, put the thing back up. Come on. All right, I'll move slow. There you go. Right back where you want it to be. Okay. So we're going to switch back here to the trigger screen, I think. We can go higher here too, by the way. I want to show you guys this because I talked about this in the market brief last night. And I didn't post it. I don't think I posted a chart on it, but I want to discuss it with you and what took place in that time period. No, not there. Wait a minute. I might be in the wrong. There we go. Right here. Right here. So this is a pullback to the daily trigger that turned into a corrective move, okay? We're roughly like right about here. This isn't going to be exact, but what's important here is twofold. It's not an exact copy, but what is closer to this is this April 3rd, right about there, and this April 12th, right about here. And this is really what you should be looking at, right inside of here. So what you can see in here is this volatility, right? Now, it ended up resolving to the downside. Okay, so volatility. These are, I believe, 1.5% moves up and down. Boom, 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 boom. I don't know that we get a 1.5 here. 0.5% would be bottom line expectation. Top line maybe a 1.5, but this is this consolidation that turns into distribution. And just switching back again to the this thing right here. This is that same thing, right? And we're kind of looking for this kind of down move right here. We don't want it to do is turn into a bloodbath. So if you look at the S&P 5, if you look at the SPY expectations that I put out last night, hold on here. You look at the S&P, if you look at the SPY expectations that I put out last night, let's go to a 1 hour here. Let's get rid of this. Let's get rid of it all. Do it all over again. So look at the SPY expectations that I put out last night. It holds kind of that thesis, which would be that you would have some kind of a like this action here today, tomorrow, and Monday, somewhere in there. And I have it resolving to the upside. Would actually resolve a little bit differently. It would resolve like would actually, sorry about this. I'm fucking this up, but the gist here is that you'd have like a ping pong action, 1, 2, 3. Then you'd get your move up to here, come back down, go higher, right? I don't think I drew in this back test and then this move higher. But even saying that, there's still opportunity for the market to actually roll down if CTAs, if we start breaking down below 5,400 on any back tests, things could get really fucking nasty. And we could start really fucking boom, 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 heading to the downside. Before you know it, you've got your 7.5, 8. I think that's 7.5 to 8%, somewhere in there. Not from here, but way up top. Down below is like your 7-8% move. I think your boy there, Wilson, said 10%. He wanted the extra downside move, but just be aware that it's there. And also, if you're going to want to take a trade above the hourly trigger, you already know from watching your training videos that you want to wait until we get above and consolidate to take that trade, right? You're actually looking for it to be more like you exit before we get to the hourly trigger, regardless of outcome. Even if we break above, you wait for the consolidation, the new high, and then you boom jump in for this part of the trade right there, right? And this is where the money part of the trade is. And you exit again before you get to the daily trigger, right? Get back in over here, and you're still not in safety until the hourly comes up and you make the new high. On that back test, a bull is out of the woods. So you're not out of the woods here yet, are you? As a bull. You're not in safety yet, are you? As a bull. Joe Donut says it perfect. It's more succinct. Or Joe Donut keeps it a little bit more simple than I do. He's like, are you above the hourly trigger? No, you're not out of safety. Personally, I like the price, hourly trigger, daily trigger, weekly trigger, all the way down the list to be in order. When they're in order like that, there's no volatility in the market. The market is supportive. Your dips will be bought. Your back tests of the daily trigger, the weekly trigger, minute, 5 minute, half hour, doesn't matter. It's the most supportive market you can have. So you want that. And as a matter of fact, we're selling right now off of the hourly trigger. You can see us selling off it right now. I know that some of you inside of the Discord, I told you earlier, or you guys are saying in the Discord earlier, got it, sell here, sell a little bit here, take a little bit more off the half hour, exit at the hourly trigger, and you should be well paid at this point if you did that. Now, if we do get above the hourly trigger and I'm wrong on this consolidative movement down here, right? We're not going to go down here and do this shit, one, and then this nonsense, and then finally break out, right? 1, 2, 3, boom, break out. If we just begin to break out already, you can jump in here to take that next trade, right? But until that happens, you're going to then be looking for a dip buy down below. The next question would be, hey, Cap, should I take a dip buy on this 1 and 5 minute crossover here? and try to take this trade from in here. You can. It's okay. It's an okay trade. Personally, I would. Oh, not this. Sorry, not this half-hour trigger, but this like little cluster, this 1 5-minute and this half-an-hour cluster like thing here. You could possibly take that. But for me, I don't like it when we're upside down like this. This is a spot where fucking sellers love coming in and trapping you and sending you to the downside. We got our target sitting on my hands here. I got no wants, needs to take along here personally. This is probably a FOMO chaser trade anyways, so not that it can't print. It's got a decent probability. Its probability is roughly, I want to say its probability here is something like 45 or 55% to go higher, but it's not that high. It's not like an 85% trade or anything like that. So let's go back to a 1-minute basis here. Let's take a peek here and see where we are. If you really want to trade this, you possibly could. Up here, could this trade lead to a boom explosion on the upside? Sure, but you're still looking for certain things, right? We talk about these rules all the time, right? Matter of fact, I got to make this video again about. It's very similar to what Mr. Yen says. He calls it being. I don't know. What does he say? Shit, it's been so many fucking years since I've watched him. I always call it a finger trap, but he calls it diddling in the middle. Calls it diddling in the middle. So you can get trapped in this too, right? And not only that, and I think I said this either on stream or in the Discord, which was they could attempt to hem us in now into tomorrow morning on this half-hour hourly trigger, trap you in here. Then we wait. Then we drag ourselves down to the downside again for PCE, and then we actually make the move higher, right? So, you even at home, and you can do this on any time frame. You can do this on a fucking daily time frame. You can do this on a weekly time frame. You can do this shit on a 6-month time frame. You can do this shit on a 1-minute time frame, a 5-second time frame, whatever you want to do. But you look for the prior high. Okay, you look for that prior high. Matter of fact, just mute all this really quick. This is a good example right here. So. This is a concept. This is a tool that you should be using whether you're a bear or a bull. And I apologize to you if you're a longtime trader for having to deal with going through this presentation right now, but I feel like I have to do this every fucking month or 3 months. So what we're going to do here is going to mute that right there. And you could flip this screen upside down. It wouldn't fucking matter. We could have price coming down into here, price coming up into here. It doesn't really matter. But when you see this move here like this, right, you want to be snapping some boxes or lines or whatever it is you're going to do. And you're going to snap one right here, right? Feel naked right now, right? You got nothing on the screen. You got the high, you got the pullback, right? Actually, I got that in the wrong place. That's wrong. Should be right here. Apologize. I'm doing this wrong right now. Doing this on the fly without any preparation. So, you've got the move higher, right? Consolidation, move, boom, push up higher, coming back down right now. So you as a retail trader, you don't know what the fuck is going to happen here. You've got no access to anything else in the world. You have nothing, just this. What are you looking for here? You know that there is, the information that you're presented with on this candlestick chart is very limited, right? You don't know anything. You don't have any volume. You don't know anything. You got no gamma. You got no Elliott wave. You got no fucking triggers. You got no velo. You got shit. So what can you learn from this chart here? You know for sure that there was a group of buyers in here, right? And this chart could be upside down. Doesn't matter. You got a group of buyers that came in here. They fucking big old thrust higher, right? Came into some resistance, right? Boom. Big old. I got to go check something. I got a bunch of noise going on outside. I might have to take another break. Here you have a group of sellers, okay? So you got buyers, sellers. That's all you know at this point, right? And they're going to fight this out. They're going to fight out, is there more demand or is there more supply? We don't know. We don't know, right? We don't know what's more, right? We got more buyers, we got more sellers. Some of you are gonna be like, oh, I got a dom behind me to tell you exactly what it is. Then you got other people that'll be like, oh, I got a fucking, I don't know. I get the ticks from 5 different brokerages, dark lit markets in Europe. I don't know. I got a buddy in fucking New York, whatever the fuck it is. Doesn't matter. You just know that there's buyers here, sellers here. You don't know which way it's going to resolve. So what are you looking for here?
First half earnings, EBIT at 3.87 billion euros.
You're looking for
36.1 million.
demand right here to show weakness, right? That would mean that if price comes down,
and revenue at
and if demand doesn't immediately push it up and it goes down, shows weak buyers, doesn't it?
33.
They had no problem buying right here, but they are having a problem buying right here, right? So this could do what here, right? We start bleeding, then it shoots back up really quick, and the sellers come in for the kill, right? Bam, downside. So your stops might be here, but you should actually get stopped out here, right? That's where you actually take the stop, up here. Even if this resolves to the upside, that's okay. You don't need to be long here, and you probably shouldn't be long here anyways. Probably shouldn't even be trying to get long in here. You're trying to get long in a breakout to the upside. These guys are already trying to jump in, catch a new low, and be Johnny on the spot, right? Sell, 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 right? Downside move. If you really are trying to get long in here, you could try to trade the zig and zag. I'm long, I'm short, I'm long, I'm short, I'm long, I'm short kind of shit. But in reality, what you're waiting for is the break higher. So if you're a bull, at least, you could possibly start a position down here. It's a low probability win on a breakout. What you really want is this breakout. This is the high probability win. So you're really looking for the break higher, consolidative move, quick little, we got the new high, just like down here, right? Boom. You got the new low, pullback, then move, right? So if you see the new high, you're looking for the pullback, and then bam. So you're like Johnny on the spot right there, rock and roll, heading higher. Showing strength, right? All of these sellers are being overrun. There's a guy over here short going, oh, fuck, I'm getting run over here. They're going to panic, and they're going to get squeezed to the upside. How often? Up and down? About 85% of the time. 85% of the time. 75. It starts like 75, and then as you do this, it becomes like 85, then 95%. Then like up in here, it's like 95% or something like that as a winner. Same on the downside. And these are choice trades for you. You can do this on any time frame. You can do this shit on a half an hour, one day, whatever you want. So I just want you to see that for what it is, right? And where we are right now. We got nothing on the chart right now, do we? Is this a place for you to get long here? The answer should be no. Is this the place for you to get short right here? The answer should be what? No. No, 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 no. This is the place where calls and puts go to die. You know that, right? This is where they go to die, right in here. Or at least on this 1 minute frame. On this 1 minute frame, these are where calls and puts go to die. So whenever you see this big move up or this big move down, whatever, it doesn't matter if you're coming down into it, you're coming up into it, doesn't really matter. This is a time for you to sit on your hands. Now, some of you can trade this. You can if you want to take like 5 minute or 1 minute trades and shit like that. I got no beef with that, but oftentimes when you do that, at some point you're going to get trapped and pulled down. You know, they're going to try to fuck you at some point while you're getting murdered in here. And it's also a good place for what else to happen. For your options to die, right? It's where options go to die, get repriced, all of that stuff. So there you go right there. I'm going to get rid of this now. Whoop. I'm going to remove that, right? So it's nice, clean for you. I'm going to put this back up in here. Here's your triggers. Bam. A little bit more information now, right? Got a little bit more information on the boards here. You had the rejection above on the hourly trigger. Half-hour trigger support down here. We're now trading above the 1 minute trigger here. This is all nice and beautiful to see, right? We got a little bit of a cluster growing here, right? Let's take a look at something else here. Let's pull this back a little bit. And what else are we noticing here? little bit of a, we're not so vertical anymore, are we? Vertical, 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 vertical. A little bit of slope, a little bit of neutrality coming in, but no proof in price, right? Starting to become predictive that a turn might be happening to the upside, but no proof yet. But this is predictive, right? It's telling you it's possible that we might turn to the upside, right? Not guaranteed yet. We could be in here consolidating and still reverse down, right? So, but we do have some bullishness, at least on an intraday basis. We've got a little bit of turnaround going on here. Not quite yet. We're going to pay attention to it. If we can catch a new high above this prior high right here, outside of this hourly trigger, I'd be more apt to think we could take that trade right there, right?
Yeah, net debt at 50.
But until we get there, what do?
EBITDA at 12.
Just sit on your hands. This could easily reverse to the downside in any time, any news. Get a bond auction. Get someone come out with something stupid on the news. Like some Bostick comes out. He told you sweet nothings a week ago, and now he tells you everything is doom and gloom. So you got no trade right now, do you? Just kind of like hang out and see what happens. Does that make sense to all of you out there? Hope that it does. Even with that big giant green, dildo down here. Well, you got big green dildos, Cap. We're going higher. It's all good. It's adding up to a recovery, but we're still not there yet. We're still not in safety yet. Still not in safety. Still not there yet. I know some of you guys are like, that was the bottom tick. Correction over. Let's go to the moon until December 31st. But just be patient. Patience rewards traders and investors. It really does. You can see me sit here on this screen. I'm on here with you all day long. 5 days a week, right? Here every day with you guys. Not every day, but, generally speaking, over the course of a year, here every day with you guys. I'm here because some of you can be here every day, and some of you cannot. So I'm here for you to make sure that if you are like, hey, Cap, I can trade today between the hours of 2 and 4 or whatever, I try to be here for you so that if you've got your own thesis and whatever you think is going to happen, I can be here to trade alongside you. But if you as a trader, it's good for you to not be sitting here with me all day long and trying to take 80 trades in a day, which we discussed yesterday too, right? Over trading. It's okay for you to sit here and just relax. Go outside, smoke a doobie. Go to your kitchen, drink a grape juice or cranberry juice. Go outside and do some push-ups. Do whatever you drink, tea, coffee, whatever it is you do. It's okay to sit back, relax, and fucking chill. There's always another fucking trade. Always. You don't need every fucking trade. If you miss a trade and it was a banger, you don't fucking need it. There's always more. Just relax, chill out, and they will come to you as time passes. Patience is critical for you as an investor and as a trader. It really, truly is. And I am not the example day trading here for you for patience because I'm here all day long every day. Does that make sense? And don't look at me as, hey, well, he trades all day long. I trade all day long because people want this format. Most formats out there are not this. There are not that many formats for a show that's fucking 5 days a week, 9:30 to 4 p.m. It's not abnormal. It's just a niche that's not filled. I know that you guys already go for your bear things to who? I like Maverick. What's his name? Maverick of Wall Street, right? You want your bear juice? You go there, right? You go to Game of Trades for more bear juice, right? You want your bull juice? You go over to, I don't know. You go to, what's his name? The guy with the cute pink shirts and stuff. Does his, like, drop-in videos or whatever. You guys go everywhere for different things. And this place here is a place for you to show up and be like, I want to take a trade. I know that I can go over and CaptainJimJames is going to be on fucking TV. Or more than likely. He's going to be there, and I can go in there and talk to the chat, and I can talk to him if he's there or whatever. So just note that the format of this show is always here. Generally speaking, always fucking here. That's it. Have some patience. Relax. Chill. Sit back and enjoy. Make sense? What else we got here?
So US 30-year fixed rate mortgages, a little changed at 6.78% for the July 25th week from 6.77%.
Duration, man. I got to say something about duration. I heard this duration argument like 3 months ago. I heard it 6 months ago. I heard it a year ago. And I freak out on duration bliss. Not you, man. I love you, brother. But that duration argument, I've heard it so many fucking times. You're talking about the inverted yield curve, I'm assuming? Is that what you're talking about? I really don't want to talk about duration. I will, but I don't want to. It's not it's not that it doesn't matter. It does.
Macro headline
It does matter, but there's so many other wheels involved in duration that matter of fact, last night I was reading an article about duration and it said the same thing. They were like, look, we got PCE coming out, we get end of month. We got some more tech or more earnings coming out. They're like, we should get off the duration trade for a minute. Jump off the bus for a minute. Market might get bulled up. We're at this like inflection point at 5,400. Just take it easy for a minute on the duration trade. That's what they were saying. These were bankers saying that. And there's like it's duration is a better tool for information sellers to sell you doom. That's the only thing I can say on that. Or that I want to say on that, because on its own it means nothing. There's other things that matter. As a matter of fact, tying into a conversation from yesterday with Vol Signals, he said, I think I'm the only person that doesn't think the Fed's going to cut rates. And I'm like, no, there's two of us here that think the same thing, which is Jimmy Barry and myself. I know that some of you don't think we're cutting rates, but generally speaking, the loudest voices in the room are him and I. And my fear on Jerome not cutting rates is dangling the carrot has been working. And he will attempt to dangle the carrot as long as he possibly can. So no, what does that mean? What does that mean? We have manufacturing and services. We have companies out there, right? Corporations out there, small, medium, and large. Large corporations do not fucking care about tightening, especially services companies, especially internet, like tech companies that provide a service, software, stuff like that. They really don't give a fuck. Like I made a hamburger and I don't have to make a second one. I just keep selling that same hamburger to everybody. So I make Adobe Photoshop, and I sell a copy to you, sell a copy to you, sell a copy to you. High rates really don't matter to them. If you look at the Fed, look at the Fed. The Fed has a website that shows companies that take loans. Right around 1978, up until about 1978, companies during tightening cycles, large companies that do this stuff, into about 1978, when we tightened and we had credit would tighten for everybody. You, me, small, medium, large size companies. Right around 1978, we started QE, MMT. And what they did, this is what the Fed and the Treasury Department did, is they secretly pump money into the fucking system to these specific companies. And they've never stopped. They don't pump money into medium and small size companies. They don't pump money into companies that make physical things generally, and that live by very small margins, that where if they build a car, they have tight margins, right? But if they build a fucking Adobe software, there's like, it's like all profit. So they don't give a fuck. These companies don't give a fuck about tightening cycles. And you have the Fed and the Treasury Department funding federal banks, prime banks, then hedge funds, then fucking banks to trade the market. And you got these large companies that invest in the stock market, push their money in them or in Bitcoin, right? And all this other money's floating around and they're scooping it up. Now, if Jerome Powell says to you and I, or telegraphs to you and I own a small company, or I own a small, medium-sized business, or I own, I don't know, I own a house. So they have smaller companies, right? If you're one person living by yourself, you're a company in a way, aren't you?
First half of the year,
Your own little government, your own little company. If you have family, you're like your own little government, your own little company, right? I always like to say, Joe Donut and I like to say that we're benevolent dictatorships. In my house is a benevolent dictatorship. Truly, I make the big decisions. Most other decisions, I don't touch them. My wife makes all those other decisions. And I'm benevolent. I'm a good man. I take care of my wife, take care of my children, right? But it's still a dictatorship, right? Now, if you're a small company or a mid-sized company and you've been impacted by tightening, you're like, we can't take these fucking loans. That credit tightening is impacting us.
Exchange rates.
What are you not doing? You're not hiring. You're not expanding. You're not doing R&D. You're not developing new products. You're just trying to max out what you can, right? You're not replacing people.
Revenue.
You're not doing anything you're like late cycle as a business. Businesses plan this. Mid small size businesses already know. I went to business school, right? You enter tightening, loosening in a tightening cycle. When you're loosening cycle, you take the money, the free money. You build out your infrastructure of your company, and you're got losses and you're losing and losing. You're not making any profit, and then you come into a tightening cycle. And what do? You tighten the hatches, right? You start going to your department heads and you say, look, you can't spend any money this month. This quarter, you can't spend any fucking money. You know you can't hire anybody else. As a matter of fact, well, I lost 3 people. Well, we're not fucking replacing them. Sorry.
And just making you aware.
Right? We're going to maximize profit on this shit that we built 5 years ago, right? 10 years ago. And we're gonna crank out this product we have, and we're gonna try to squeeze out as much profit as we can until there's a loosening cycle, right?
On web and mobile.
So what Jerome Powell does is he comes out and he's like, hey, you know what? We're gonna cut. I promise you 1 cut this year. And I promise you, and now we're coming to the end of the year, right? And you get everybody clamoring for it. And you got the talking about a rate cut. So what happens? Some of these companies that are small and mid caps say, you know what? Maybe we start spending again. You know what? We're not gonna not replace those 3 workers, or we're not gonna. If we had 10 workers, we went down to 7 workers. You know what? You can hire the 3 back, but we're not gonna expand yet.
First half revenue was 30.
So what does that do? That data comes and floats through every time Jerome says that to you, or publicly,
1 billion,
right?
Under the
Not every company, but these small and mid-sized companies are like, all right, we got. It sucked having 7 employees, man. Now we're up to 10 again. Woo! We got cuts coming. Data comes out that there's a little blip increase.
Operating profit,
right? Of what? GDP.
That is in line with the expected.
Right? Manufacturing, all these different things are like starting to pop. Unemployment's going down a little bit, just a little tiny bit, right? What are you doing? Stabilizing that unemployment rate a little bit, right? You got Jerome out there just trying to finagle it a little bit.
And just making you.
And meanwhile, you and I are sitting here going, we're getting fucking rate cuts. Woo!
Interruption in trend.
And he's like, I don't need to cut shit. GDP looks good. They're rehiring people. That unemployment rate's fucking just being calm right now. Now they can still over tighten.
So a bit less
right?
With
they can catch them in the ass. That typically happens actually. They run it a little too long, don't they? But is he going to cut? And this goes to duration. Does duration matter? No, it doesn't matter just yet. He's going to fuck with this as long. He'll ride this pony until it breaks. He will. He'll ride this fucking pony until it breaks. And even the numbers that came out this morning, the 2 reports came out this morning. I'm sitting here at home and I'm like, this fucking guy, Jerome Powell must be at home fucking going like this right now. Fist pump, and he's like, I'm tricking these motherfuckers out there. They're all fucking, they're expanding right now in these hopes. And this is going to help my fucking unemployment, my inflation, all this other shit, and I'm just stabilizing that shit sideways right now. And I get to fight inflation and bring inflation down. I know that you all will say 3% is okay. If I can get that 2% and that fucking keep that unemployment rate under 5.9, or even just slow us down from going from 4. I think we're at 4.1 or 2 right now. Just slow down the curve from there to 5.9. It's that. What is it called? It's called what? A soft landing, right?
And some earnings here from St. Gobain.
So he runs that as long as he possibly fucking can. So duration.
At 23
As long as he keeps fucking with it,
down 6%.
duration don't mean shit, does it?
EBITDA at 3.
Just doesn't. Doesn't mean anything.
2.3%.
It will matter though
Free cash flow.
if he over tightens, doesn't it? It will, it won't it? But we're just not there yet. We're not there on a daily basis, or on an intraday basis or intra-week basis. I guess if you looked at it in a higher time frame, yeah, we're there. Just not today. Matter of fact, last night on the market brief last night, I was going over suppressed volatility, and I showed people on a chart. I said, look, if you look down here on a monthly basis, we're going to have a volatility event. It's almost guaranteed. When?
Further here from
Could be 3 months, could be 5 months, 6 months. Is it tradable? No.
Already been achieved.
Really isn't. So then last night I'm like, well, how would you know how to trade it?
Net debt.
If we know that it's coming,
Net income before
and you can't give
interest
something better than 3 to 6 months,
14.
we already know that. We knew that a year ago, right? We knew a year ago that we would likely have a bull market into the beginning of 25 and possibly extend to 2026, right? That's not fucking tradable, is it? I guess it kind of can be, but let's be honest. You want something closer, right? So the only thing I come up with last night was, well, every time we're underneath the daily trigger, every time we start rejecting the daily trigger, that would be pause for caution, right? That we could trigger that vol event, especially if we get underneath the weekly trigger, right? We have the normal correction. If we begin to reject that weekly trigger, you start to see the daily trigger come down and cross below the weekly trigger, I'd be scared of that vol event. I'd at least be aware of it for the next 6 months. So every time we have not just a pullback, but a correction for the next 6 months, I would be at least aware that there's a chance of a volatility event. Not necessarily an Armageddon or a Volmageddon 2.0 either. More towards 1995, right? Blow off top. That's where you blast down 15, 20%, you go up 30, 40%. That's not a crash. Well, it technically is a crash, but not really. Like a crash, or in your mind, what you think of a crash is we go down 20% and we enter a bear market, right? For a sustained period of time, 1.5 to 3 years. This is more like elevator down or escalator down, escalator up, escalator down, or elevator down, elevator up, elevator down, but we resolve to the upside. So just be aware of it. I think that's the best you can say on that topic. And duration, until we get there to where Jerome is over tightened, duration can duration. It can duration and duration and duration and duration and duration. It needs more mechanics. Needs panic cuts. Needs unemployment ramping. Likely needs a touch of likely, not positive, or not guaranteed. This is a low thing too. It could be like 60% of the time, just like duration. But a touch on 2% inflation would be nice, and then start rocket shipping up. On rampant unemployment helps with that. And then, of course, the yield curve would be another third indicator of that happening.
For Pratt and Whitney engines.
Starting to break above the hourly trigger right now. Let's take a peek at the velocity on a half-an-hour basis.
40 engines and
try to break to the upside here.
Revenue annually when at full operational capacity.
This looks pretty sexy, doesn't it? This looks fucking sexy to me. What do I always say to you guys? Say to you guys, you're looking for a low on hourly velocity and new or higher lows on velo. And you would hope that we'd at least get up here and do this, right? At least a little Colbert bump or something, as they used to call it. at a minimum, something like that,
Something
right?
like
So this is looking
after
pretty
hours now.
bullish here that we're going to squeeze higher.
Agreement for the
And maybe we don't get our 0.5% up
Yeah.
move this morning with a mini rally.
560
We turn it into a rally even higher.
by the first
Where is the target?
5.
Target
Operation
is
needs authorization under
549.
trust and golden power regulations.
Uh-oh. I'm losing the stream. So here's your next target to the upside. You got the new high. You're looking for a successful back test of the 1-minute trigger to move higher. And we're getting a little bit, we're losing some liquidity in the market here. Be careful here. A little bit of liquidity lost in the market where the screens are turning black over here. You see that? Take a quick peek right there. Nice timing today, huh? See if we can squeeze this bad boy higher to 549. I wonder what 543s are going to print if we go there. 5,000%, I'd assume. I'm not going to do the math in my head. No, I'm not going to do the It's beginning to break higher now, getting extremely bullish here. Oh, wait a minute. I got to turn this on. There we go. Load that news feed up. And this thing needs to come a little bit higher. Commercial office space. Will that be a trigger? I think that'll be a part of it. The issue with if we are at the end of a long-term debt cycle, if we are, the housing market is implying that we were coming into the end of a long-term debt cycle. We had one in 07, 08. We're supposed to be coming into one in mid-2026. Commercial real estate. I would like to see that be a play into this, but it might only be a part of a end of a short-term debt cycle. I would be really, truly, if you're looking for if this is the top of a long-term debt cycle, you need to also see the rest of the world participate. So you would need to see debt to GDP ratios be horrendous around the world. And you'd also want real estate crises around the world as well. So though I agree with the commercial real estate being an issue, I don't think that it's the biggest issue. I think there are larger, or historically there are larger at play issues that could, like when our boy back there, Barry, that guy right there, I don't know if you can see him, right guy right there, he needed the world to participate to actually make money. And they did eventually. So we need the rest of the world in this too. You need you have to watch very closely other like the whatever accords, the Plaza Accord signers and stuff like that, or countries like that, I should say, to join us in the end of that long-term debt cycle. You need the world to join us, even with the commercial real estate problems here in the U.S. I'm with you on that. I think that's a piece of the puzzle. I just don't think that it's the complete package that I'm looking for. I think we're at the end of a long-term debt cycle. I'm bearish on a higher frame here. I don't know when this market ends, but I do think it's January of 25 to mid 2026. It's going to get fucking nasty. And I'm not sure if it's a short-term or a long-term yet. I think it's long-term. And I think it's long-term too because of kids and the war stuff and all that other kind of shit. It's all like lining up right now. It's glaring in the background. And the U.S. is doing something about China and Russia. So it seems like whether it's a synthetic World War III or not, we're heading there. So yeah, Europe everyone will participate if it's like 07, 08. If it's like every housing or every housing cycle, a major housing cycle, every 20-year housing cycle we've had, we should, right around there, enter one. We should. Now, I don't think this housing bubble is going to be as worse as the commercial real estate. I think that's where you're going to see the untold damages. I don't think you're going to see it in housing. Like, you know how, do you guys know anything about our girl there, Yellen, back in the day in 07, 08? Like 3 days before the meltdown. I think, a week. I think a week before the meltdown, she was quoted as saying, well, at least we saved the housing market. 3 days later. They didn't save the housing market. The U.S. was at a point where they were not. If you're young, the older people know this already, but if you're young at that time, the U.S. could not, or large corporations in the United States were not going to make payroll for the plebs. And I mean like office workers around the U.S. for large companies, Walmart workers, Home Depot workers, McDonald's workers. Like those checks were going to bounce on Friday or Monday. It wasn't Friday, it was Monday or something like that. It's fascinating how it went down. You want to see fucking burning tires in the middle of the street? That's how you get it. That's how you get it. You have every major company's checks bounce on Monday. That is how you get burning tires in the fucking middle of the street. So they sold your future down the road for that not to happen. All right. Starting to squeeze higher now. If you guys are in this trade, congratulations. There might be one more check back here at the cross of the 1 and 5. You might get left behind, but there should be one more, and you'll trade this up higher here to 549. It's a good trade in here, by the way. It's a high success rate trade. All right, so bring this back over here. If you're in the Discord and you're watching this program and in the Discord right now, and you had questions earlier about trades, there's one for you right here. Yeah, it'll impact housing market. Winky, I just don't think it'll be like, I don't think that's going to be the, housing market's going to go down. It's just not going to be 07, 08. 07, 08, I was an adult then. I was living in one of the richest places in the U.S. I was living in Vail, Colorado. At that time, one of the wealthiest. Enron. Every single person from the C-suite had a house in Beaver Creek. It was fucking crazy to watch what took place in Vail during that time period. It was crazy. One of my best friends I grew up with bought $1 million home for $150,000 in cash. He had just sold his home, and he had a deal fall through for a new home right before the housing crash, and so he's sitting on all this money, and the housing market crash took place, and he was like, "What the fuck is going on?" He's stuck renting a house, and he had cash on hand, like liquid cash. He bought $1 million home for $150,000. At that was worth $1 million then. Bought a fucking mansion. It was fucking crazy. You got $1 million house in 2007, 2008. Like $5-10 million today. Nice little refresher course here, huh? On making money. I don't think that houses are going to be in the U.S. We have a bigger problem. This is cogs of the wheel of the machine. Let's talk about that for a minute. I had these white papers. I don't know where the fuck I think I might have them on a different Google account on a bookmark. I used to keep a bunch of white papers on like Volmageddon. Then I had white papers on the housing crash of 07, 08. They never get brought up anymore, but they were written back then. And a lot of people don't talk about this. I don't know why they don't. There was already a housing shortage for renters in 07, 08. I want to say, don't quote me on this, and I guarantee my numbers are wrong, but we were at like a 15%, I think. I think it was like 15% housing shortage going into 07, 08 for renters. And then when we went into 07, 08 and had the meltdown, we created an entire generation of new renters. So any of you that are landlords out there know about this. There was right around like 2000, I want to say 2012 to 15. I started getting into real estate then. And I met other men, or I don't know if I met other women, but I met some men that took me under their wing or whatever. And they were like, I was like trying to rent to people, and no one had good credit. And they had great jobs, great lives. Everything was good except for their credit. And this one guy was like, don't you know nobody's got good credit anymore? He's like, none of these fucking people have good credit. He's like, they got washed.
Update here for JP Morgan.
He's like, they got washed out
Reports the
in 07, 08. They'll be renters for the rest of their lives.
Walgreens junk.
So you got to live with it. You got to look for other reasons to make them a renter. Now later on, years went by, and I read all his white papers about it. We then went from 15% of people, shortage of about, I think 15%, to 30 to 35% housing shortage. So this is from after 2008 until 2022. We had about a 35% housing shortage. And now the anticipation is that, and we've never, so that number's only grown over time, is my point. Now when you saw in 2022, when you saw BlackRock and all of these other companies start to invest in tract housing that are rentals, apartment buildings, all this kind of shit, they were doing that because they knew or thought that the housing market was going to roll over
Just a bit further here
in 2022.
Headline.
There's a term for it in the housing and housing trends. It's not called a fake out, but it's called something like it. It's called like a fake crap. I don't know what it's called, but there's a term for it, where the market dips and it's like a false top of some kind, and then it does a blow off top into 2026. Now they started that construction because they're anticipating that number will only grow. Now, certain parts of the country haven't done or have overbuilt in anticipation of this taking place. Austin being one of them, right? Housing prices have already come down there due to the increase in building that have brought housing prices down naturally. Sorry about this. I'm
for 2.2
not doing my job down here.
dollar state aid for new nuclear reactor. It's according to Reuters.
Be careful here. There's a little bit of a resistance on SPX on the half-an-hour trigger.
Isotopes.
A little bit of pullback coming up here for you.
Below cost.
Just note that there's a little bit of a half-an-hour trigger here in SPX. Should impact SPY just a little bit. So just be careful of it. If you've got multiple screens at home, should we just a little pause here as we hit the half-hour trigger on SPX. Housing. If we continue to build into 2026, that should offset the price of housing. Commercial real estate crash should, or even possibly consolidate, pull down, then go higher. We've got some little bit of resistance here. I got something going on my end here. I apologize. I'm having some issues here on my end. I'm getting like flashing screens and stuff. I don't know quite why. Ah, fuck. My stream is dropping, isn't it? Am I losing the stream elsewhere? You might need to reset your monitors at home if you're I've got construction going on outside. I could lose the stream right now. I can hear construction guys outside. It's possible I lose the stream either through power or internet. Give me like five. I remember when I was earlier and I was like, hey, give me a minute. I can hear some shit outside. Give me like 15 minutes. I'm going to just go outside and check and just see what the fuck they're doing. I can hear like big machinery outside. Give me just give me like 5 minutes here. Have you guys lost the stream? It's good on your side? It's back now? Okay. You couldn't hear there for a minute? Okay. Just so you know, I've got construction going on outside. I don't know. The city gave me some notice that they were doing some work on sewer pipes, but I think they run electric under there too. Not like a drain or anything. This is like big underground shit. So just let me go outside and take a peek and make sure everything is okie dokie. What up? Hi, Matthew Ryan. What up, brother? Give me just 15 minutes. I just want to check and see what's up. Can't win, dudes. Yeah, you guys had no sound. Reset your browsers. Another note here, too. VIX 9-day is rejecting and rolling off of these yellow bars down here. Look out for a squeeze. As we reject on VIX 9-day, I'll try to bring this higher. VIX 9-day will attempt to close the gap to the downside. So bring this up. This is VIX 9-day down below here. There's a little gap down here that needs closed. Could lead to a powerful upside move. The fuck is the VIX 9-day? Let's see if we can do a little party time here. Give me just 5 minutes. I'm going to go outside and check. Yeah, I mean, my dogs are kind of freaked out right now. Watch out for a drop here. It's a big cross coming up here. It's more liquidation break as this cluster is building here. It's building for an explosive upside move. Just watch out. There's a big concentration of triggers all coming in. We're in a 1 minute. If you were looking at this in a higher frame, it would just look like a blob for an upside move. So you could see a little bit of downside violence and some violence to the upside. Like something like that, dude. Got the back check of the 1 in the hour, and then once the half an hour crosses right here, possibly have a little bit more down right about there. Fucking bookmap ain't doing shit right now. Bookmap looks like maybe I should I need to probably go back and take another bookmap class and fucking redo all my shit on bookmap. It's very thin. Who's hating? Somebody's hating? Does people hate me? That's awesome. Shaq, people hate me? I want you to know if there are any haters of me out there, I appreciate that I rent space in your head. If there are any haters out there, I want you to know that I appreciate you. I appreciate that you think about me all night long. You go to bed at nighttime and think about me. I want to tell you something else. This is a very key point here. I want to tell you something very, very, very important if you're a hater. If you're watching this show right now and you hate me, I want you to know something. Please do me a solid. Go out and tell every fucking person you know that you hate me. You probably don't know this, but it gets me more followers. So please, tell anyone you want that you hate me. I appreciate it. You actually get me. You actually get me more followers. You help me. You know what doesn't get me followers? People that like me. They don't say anything. Shaq says something. Shaq and Blissowitz are my homeboys. Matty Ryan's being nice to me. But if you hate, you get more followers with more hate. The more inflammatory you are. Oh, there's a tiff going on. Okay, we can solve that. Hold on a second. We can solve that right now. I didn't know there was a tiff going on in the Discord. We'll fix it right now. Hold on. Take 2 seconds. We can fix it. Just give me a few moments here. Give me one quick second here. Just one quick second here. All right, cool. Where everything is good then. Burr. Turn that off. Turn that off. I am definitely, my internet is slowing here. If you're watching the show right now, just note that you may lose the stream. Shit. Ah, that sucks. I'm losing the stream. That sucks. Yeah, I'm losing. So just a heads up out there. If you can hear me, I am. If you can hear me, I am losing the stream. My internet is like on, then off, then on, then off, then on, then off. I'm gonna go check and see what they're doing outside right now. Take a snip of this right here, okay? Take a snip of this. We could roll down here, but just note that this is support. If you're looking for a dip buy, if we do lose support here, this is the dip buy to go higher on this cross that's taking place. I'm losing the stream right now. Fuck. Hold on 1 second here. God damn it, I hate this. All right, give me a few minutes. I'll be right back.
So in 5 minutes' time now, at the top of the hour, the US is due to sell $44 billion in 7-year notes. The prior bid to cover was 2.58. The prior high yield was 4.276%. Expecting the results of the 7-year note sale, the Treasury's pre-sale when issued yield for the 7 years comes out at the top of the hour. The auction results often follow a couple of minutes after this. When issued 7-year yield 4.166% ahead of the $44 billion auction. So again, we are now shortly expecting results from the 7-year sale. On release, I'll be leading with the bid to cover ratio. Bid to cover 2.64, 2.64 with the high rate of 4.162%, 4.162%. So the US sold $44 billion, awarding 68.69% of bids at high. Primary dealers take 8.87% of the sale, direct 16.76%, indirect 74.38%. Again, the high rate 4.162% and a bid to cover of 2.64.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of 1 month and save 92%.
All right, can you guys hear me out there? Let me know in the chat if you can hear me. Either in Discord or on Twitch or YouTube or something. Just take note here. You can hear me. Okay, cool. Just take note here. This is not what I want to see. I don't like seeing this. I want you to see this too. I don't like seeing the failure. Well, I mean, we did just break R1. I guess, yeah, I'm fine with this. I'm fine with that high not being to the daily trigger because we did just tag R1. Yeah, maybe I'm getting bitchy here. And I shouldn't be. We hit R1, which is fine. We don't need to actually hit. This is wrong. What I posted here is wrong. This should be more like this because I need to take account that we tag R1. Come down here, I guess would be the next one. Then up there, and then the full pull down for the half hour cross. I fucked this up. So we tagged that. This is positive. This is bullish. I'm saying I said I don't like this, but this is good. That's bullish. But then we got a cross of the 5-minute trigger coming. That should give us enough room to get up there to the daily trigger. And then you get the half an hour trigger later on coming.
The results from the
And that should be the get above. Should be the get above the daily trigger if we can get above it. So let's try this like that. Then we test the daily trigger. And then we have the half an hour cross to get above the daily trigger. So that's probably me. It's probably me. My bad. I didn't account for this. I don't know if you can see it at home, but there's an R1 right in here that I didn't account for before the grind to get up there. So just be aware of that. Okay, sorry. So I went outside. They're doing construction out in the fucking street, and they're also doing construction where they're messing with the telephone poles or interfering with the telephone poles at the same time. So I could end up losing the stream at some point. It's possible.
69 counterparties take.
You can't see it, right? Let me see if I can. Let me see if I can thicken it up. Let me see if I can thicken it up a little bit for you here. Can I thicken that up? Visibility. I might have to do some work on this and make it thicker. In the future, I'm gonna write this down. I'm gonna try to do this so that on stream you can see it better. I thought I had the ability to do that. I swore that I was able to make. It's not saying that I can. I swore that I had the ability, or maybe I got rid of the ability so that you wouldn't have the ability. Or maybe I wrote it so that you could, and then you know what I got to do is I got to go into the Pine script. So I don't know if you know much about Pine script, but there are, within the Pine script, there's little options where I can choose the line thickness, color, all that. Oh, if it's a line, if it's dots, whatever the fuck it is. So I'll rewrite this Pine script to show up. In the meantime, I'll try to snap a line or something. Maybe make it thicker. I'm gonna work on this I gotta do the work on this so that it shows up on stream better. I don't really want to fucking be doing this every day. That's R1, by the way. Yeah, I appreciate you saying something out there, whoever that was on YouTube that said you can't see shit. I apologize for that. So that's R1. And I should have accounted for that because you can see that we come back to the 5-minute, right? You have the help of the 5-minute trying to get above the daily trigger. That should fail, and then it would take the half an hour trigger test to break above if we're going to break above. So yeah, I apologize for that. Thanks for saying something in the stream. I haven't done a live stream test in a while. It's something where like I do like a private live stream, and then I go on my own TV at home and I look at it and see if it's like I'm looking at a picture here that's like fucking 7 inches wide and 4 inches tall. Apologize for that. Not really trouble, just what I see here looks different than what you see at home. It's like anything. If any of you are involved in broadcasting or film or music, like you have monitors for this stuff, and it sounds one way to me, and it might sound differently to you. Same thing with movies. You notice it a lot in movies today. Editors will have a high-end system, and something to them looks great or sounds great, but you might have like, I don't know, a fucking Roku TV at home that costs you $300 on sale from Christmas from Walmart. And your experience is not going to be the same as that editor's in a booth. And editors like me are famous for not testing or looking at what I'm presenting to you on different mediums. So, and I haven't done a test like that on this setup in probably 6 months or a year. So I apologize that you can't see where R1 is. I can rewrite this code so that the one that you get is very faint. The one that I give to you is faint, but the one that I use on the screen here should be like more amplified so you can see it when it shows up. So I can write like a second version of this and a version 2 just for the show's presentation. That's right. Yeah, see, John Haggerty knows exactly what I'm talking about. What up, Kurt? Good to see you, brother. Good to see you, my man. Hey, Kurt, can you do me a favor? Did you ever get did you ever get the gift subscription or no? Did you ever get that gift subscription from us? I meant to follow up with you to find out. I gotta have someone look at my DMs for me on Twitter. Old man, get rid of him. Oh, you subscribed? Can you do me a solid, Kurt? Can you open a help ticket in the Discord? And I'm going to upgrade you complimentary to Pro Trader. You'll pay the subscriber fee. But I'll get you Pro Trader, bro. Just open a support ticket and just say, "Hey, I'm Mr. Watts' family member, Brian Watts, Mr. Yen." Sorry, I said Mr. Watts. Say I'm Mr. Yen's brother. Oh, what I got here? I got to relabel some of this shit too. Oh, there it goes. Break time. Be right back. Mute that. It's a green screen. You can't see me on the YouTube screen? Can you see me right now? Ah, fuck!